Welcome back, our veteran and friend, Patrick Rambo, and Sister Monica from St. Patrick's Catholic Church to lead us in the invocation.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Almighty Creator, as we place ourselves in your presence this morning, we are reminded of your command to till and care for this world which you have shared with us. Help us always to be filled with wonder and surprise at your goodness. Be with the commissioners as they make decisions affecting the welfare of this York County community. In the words of the prophet Micah, let us be reminded that this is what the Lord asks of us: to act justly, to love tenderly, and to walk humbly with our God. In your holy name we pray. Amen.
Okay, we'll move on to item number 2 on the agenda.
I make a motion to approve the minutes from the August 16th, 2023 Board of Commissioners meeting as submitted.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries. We'll move on. Open it up for any public comment. Okay, we'll move on to the consent agenda.
I make a motion to approve the consent agenda items for the Office of Children, Youth, and Families.
Second.
I have a motion and a second. Welcome back, Claire, who's become a permanent fixture at our commissioners' meetings. Good morning.
So what you're going to see, well, all the consent agenda items this time are CYF. 2 of them are routine. It's the transportation agreements with the schools to get kiddos to and from their district of origin, if that's where they're going to attend school. The adoption amendments. 2 that are a little bit different is our yearly agreement with the Commonwealth on information sharing. So we have that there. And then we also have the submission of our receipts and expenditures for the 3rd quarter. So I'd like to thank Tanya and her team. They've put a lot of work into the budget, getting things up to speed. Loss of a fiscal officer can be tough, but they've been able to manage through and come out on top. So,
Okay,
Good.
all right.
thanks.
Thank you.
Any further discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries. We'll move on to new business.
I make a motion to approve an agreement between the County of York on behalf of the Sheriff's Office and Permidium, Pineville, North Carolina, to provide online pistol permit application and processing at no cost to the county for the period of October 21st, 2023 to October 20th, 2024, pending successful contract negotiations.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries.
I make a motion to approve a master services agreement between the County of York on behalf of the Information Technology Services Department and Comcast Business, Harrisburg, Pennsylvania, to provide communication services from August 30th, 2023 to September 29th, 2028.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries.
I make a motion to approve a services order between the County of York on behalf of the Information Technology Services Department and Comcast Business, Harrisburg, Pennsylvania, to provide broadband services and internet connectivity for a total cost of $16,830 per month for a 61-month term.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries.
I make a motion to approve a contract agreement between the County of York on behalf of the Human Resources Department and Collins Wagner Agency, Inc., York, PA, to provide cyber liability insurance coverage for a total cost of $88,753 for the period of September 6, 2023 to September 6, 2024.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries.
I make a motion to approve the submission of a grant application on behalf of the Human Services Departments to the York County Community Foundation, York, PA, in the amount of $7,768.94 to cover the cost of Dr. Traylonda Triplett to travel and present at the York County Mental Health Equity Summit.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries.
I make a motion to appoint Jason A. Weaver as a board member of the York County Ag Land Preservation Board for a 3-year term from September 1st, 2023 through August 31st, 2026.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries.
I make a motion to approve a purchase between the County of York on behalf of the Facilities Management Department and Eastern Lift Truck, York, PA, for equipment removal and installation of a new garage door and operator for the Judicial Center Sallyport for a total cost of $17,140.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries.
I'll make a motion to approve a contract amendment between the County of York on behalf of the 911 Department and the Pennsylvania Department of Conservation and Natural Resources, Harrisburg, Pennsylvania, adjusting the repayment amount in the mobile data computer service agreement originally approved on July 5th, 2023, from $21,000 to $8,365.20 per year.
I believe that's $8,395.
95, okay.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries.
I make a motion to approve a contract amendment between the County of York on behalf of the Court Administration and Tyler Technologies, Plano, Texas, to increase the annual allotment of text messages sent to jurors at an increased cost of $1,680.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries.
I make a motion to approve a pass-through agreement between the County of York on behalf of the District Attorney's Office and the Pennsylvania Commission on Crime and Delinquency, Harrisburg, Pennsylvania, in the amount of $31,890 for the period of February 1st, 2022 through January 31st, 2024. This grant provides educational support of gun violence victims, families, youth, and offenders to improve their employment prospects and enable attainment of financial self-sufficiency.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries.
I'll make a motion to approve a contract between the County of York on behalf of the Youth Development Center and Adams County Children Youth Services, Adams County, PA, to house Adams County youth at the York County Youth Development Center at a daily rate of $576.50 for the period of July 1st, 2023 to June 30, 2024.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries.
I make a motion to approve a purchase between the County of York on behalf of the Information Technology Services Department and Access IT Group, King of Prussia, Pennsylvania, for Global Relay Electronic Mail Journaling Annual Software Subscription from September 7th, 2023 through September 6th, 2024, for a total cost of $48,810 under a PA Invitation to Qualify contract.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries.
Motion on behalf of the Community Development Department of the York County Planning Commission authorizing and directing the commissioners to execute the following amendments to the subrecipient agreements for activities included in the adopted York County 2020 Annual Action Plan as amended for funding from the U.S. Department of Housing and Urban Development, Washington, D.C., as listed below in the agenda.
I'll second the motion.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries.
Motion on behalf of the Community Development Department of the York County Planning Commission authorizing and directing the commissioners to approve an increase in an activity included in the adopted 2021 York County Annual Action Plan from funds in the 2020 Annual Action Plan as amended for funding from the U.S. Department of Housing and Urban Development, Washington, D.C., as listed below in the agenda.
I'll second the motion.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries.
Motion to ratify the recommendations of the Opioid Advisory Board to award the following organizations, departments to receive York County opioid settlement funds from an effective date of September 1st, 2023, as listed below in the agenda.
I will second the motion.
I have a motion and a second. Just a little additional background on this motion, and I'll kind of go back to COVID days when the commissioners formed a Recovery Strong Task Force of community leaders and subject matter experts to guide us through and navigate how we recover from COVID. We did the same thing in our efforts to close the digital divide in our community by establishing a broadband task force. And as with the funding, settlement funding we are receiving from the opioid litigation, the commissioners appointed an opioid advisory board. Roughly 17 community leaders in our organizations, both of our two largest healthcare providers are represented on that, WellSpan and UPMC, along with social services organizations and folks from education sector. So a cross-functional group of individuals was established. These folks were selected based on their knowledge of the opioid epidemic and the issues at hand, but also their commitment to eradicating issues related to the opioid epidemic in our community. So on behalf of the Board of Commissioners, we do want to thank them. They've spent a lot of their personal time meeting and discussing applications. I want to thank the Planning Commission for leading the application process, much like the Planning Commission has done with the open land space preservation process and Marcellus Shale funding. They do have a robust process in place by which to vet application. So what you see today here as a motion to ratify is for allocating funds in the first two settlements that the county has received. The county will receive 18 settlements that roughly equate to $21 million, which, do the math, it's roughly $1 million a year. Some years it's a little bit more, some years it's a little bit less. So this will be an ongoing process annually. The Opioid Advisory Board will bring recommendations in front of the commissioners for the allocations of the funds. I do also want to mention that York County was one of the first counties to lead the litigation effort against these drug manufacturers. So I really commend York County for stepping up and taking a stance against the opioid epidemic. I know we have some folks from the Planning Commission here. Is there anything else you wanted to add?
I think it might be, and I know Caitlin's coming, it might be important to let the people know how the process works in the coming years, how they would make application for the funds. And I know you guys are going to do a great job on this one in the first settlement, like Julie said, but maybe be interesting for the public to know.
So I can give a little bit of background and just say that
Can you
we
get
received.
closer to the mic?
Sorry, we
That's
received
better.
35 applications for this funding cycle, which represented over $16 million in requests. So this was a big task by the Opioid Advisory Board to really review these applications and to prioritize these funds for this year. We still do have funds remaining after making these recommendations to the board, so we look forward to further review. We have gone back to some of those agencies and asked them for further clarifications to provide more details or maybe to tweak some of their initiatives that they're suggesting for funding this year. So we do plan to bring more recommendations to you before the end of this calendar year to be funded for January. The awards that you see before you today are majorly in three areas. The first one is to organize the community partners that we will be working with throughout the time of this settlement. So that is the York Opioid Collaborative being placed in that role to really position conversations, collaboration, to orchestrate shared vision and goals, and then also to coordinate those partners assessing future needs so that we can make better decisions and keep that evolving in time, and then to collect metrics so that we can really be accurate with how we're utilizing these funds. The second major area is to elevate treatment, recovery, and support services. So these are great agencies doing the groundwork, literally on the ground, supporting recovery and those that desperately need the help as they recover. And then third is the area of prevention and education. So we have several initiatives that will work throughout the entire county, including our own York Adams Drug and Alcohol Commission, providing a lot of very worthwhile and excellent educational opportunities for our students and community. Again, just echoing what you said, the OAB has invested so much time. We're so very grateful for their input and look forward to continued work together with them.
Great, thanks. And while I'm probably a little bit biased because it's York, I can say when the County Commissioners of Association of Pennsylvania got together, I would say York County is by far ahead of some of the other counties across the Commonwealth, and we have an extremely robust process in place that's fair and equitable, and other counties are still trying to get their process in place. So again, I just have to commend the Planning Commission for their help in getting this process together.
I'd like to ask one question, and I'm not trying to put Deirdre on the spot, or maybe even Greg, but I've read in the paper, and there's a lot of information about the opioid settlement and the settlement we went through many years ago when we started the litigation, as Julie said, the commissioners have done. Are there other settlements out there that there might be funding coming, or is this major settlement with the pharmaceuticals that were listed on the information we got settled what will be coming forth for the county?
I can't answer that.
Yeah.
There is another settlement that's under place with CVS, Walmart,
Right.
Walgreens, and there's a couple other folks. There'll be additional funding that comes to the counties across Pennsylvania.
And that's what I thought. It was in the paper, and they kept saying, we have a settlement, but there's other, I guess, legal situations standing out there, so there might be more money coming. That's great. Great news. Okay.
Any other discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries. Again, once again, thanks to everyone involved with this. A lot of work behind what's on this motion.
Motion to approve a purchase between the County of York on behalf of the Information Technology Services Department and Global Data Consultants, Chambersburg, PA, for 181 Lenovo laptops, 145 Lenovo desktops, and three-year warranties for a total cost of $311,022.66.
I'll second the motion.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries.
Motion to approve the weekly disbursements for the week of August 23rd, 2023, totaling $6,026,016.16.
I'll second the motion.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries.
Motion to approve the weekly disbursements for the week of August 30th, 2023, totaling $6,361,339.63.
I'll second the motion.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries. On to resolutions.
Motion to adopt Resolution 2023-17, appointing Commissioner Hoke to the Board of Directors of the South Central Workforce Investment Board and authorizing Commissioner Hoke to execute the Chief Elected Official Agreement and Chief Elected Official and Local Workforce Development Board Partnership Agreement on behalf of York County.
I'll second the motion.
And I will abstain just because my name is in the motion to be appointed.
Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries. There were no executive sessions since our last meeting, and I don't believe we have any other business other than to wish everyone a safe and enjoyable Labor Day holiday. I will open it up for any public comment. Hearing none. If I could have a motion to adjourn.
I make a motion to adjourn the meeting.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor of adjourning signify by saying aye.
Aye.
Opposed, we are adjourned, and we will move on to Salary Board.
I make a motion to approve the minutes from the August 16th, 2023 Salary Board meeting as submitted.
Second?
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries. I'll open up for any public comment. Hearing none. If we can move on to the next motion.
Make a motion to approve the positions, salaries, hours of work, and fringe benefits as provided by existing collective bargaining agreements or as set forth in York County Employee Handbook or York County Policy Manual for the following departments and row offices as stated below, with no additional benefits or concessions unless otherwise noted.
Second?
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries. An executive session was held on August 28, 2023, for the purpose of discussing general personnel matters to include discussions on salary modifications, job description reviews, reclassification reviews related to the Veteran Affairs Office and the Solicitor's Office. The Salary Board discussed and received information and advice regarding such matters. The Salary Board did not adopt any policy, procedure, or take any formal action on such matters. Any items upon which action has been requested would be included as a motion on the agenda. I'll open up for any public comment. If I could have a motion to adjourn.
I make a motion to adjourn the meeting. Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor of adjourning signify by saying aye.
Aye.
Opposed? We are adjourned, and we are on to Retirement Board.
Make a motion to approve the minutes of the previous meeting held on August 16th, 2023, as submitted.
Second?
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries. I'll open it up to public comment. Hearing none. On to the next motion.
I make a motion to approve the following buyback of non-intervening military service for prison employee Travis W. Shaw, July 10th, 1996 through July 10th, 1999, for a total service time of 3 years, 0 months, and 1 day. Total county portion, $13,083.93. Total member portion, $13,083.93. Total purchase amount, $26,167.86.
Second?
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries. I don't see Greg here.
I don't
But I
either.
see Lee, so we'll skip over item number 5, and you're up, Lee. There you go. Oh.
Good morning.
Morning.
Thank you. Good morning.
Morning.
Here to review, obviously, through the end of the second quarter, but I will give you kind of an update of where we are actually this morning as well. So I have a pretty active summer month here in the market. But before I start, one page I don't normally take you to, but for probably an opportune time, from the market update, every year, as you know, we do a big investment symposium for all our clients. And in the past, it's always been in person in Chicago, and it's been held in Chicago, where our headquarters are again this year. But we are actually opening up for a hybrid event. So that's in a couple of weeks' time, September 15th. So we normally have great speakers on, a lot of good stuff about the markets. They're not only market people, we bring in guest speakers too. And so feel free, if you'd like to listen into that, have that in the background as you're working along that day, let me know, and obviously we'll get a link over to you. Okay then, let's get on to the more interesting part of the economy. So I'll pick just a few pages out of here for you that we'll touch on. As I say, I'll give you a kind of an idea through this week where things are going as well with the economy. But, you know, really Q2 was a continuation of Q1. The economy continued to defy expectations, and GDP, although we show here, did accelerate to about 2.4%. This morning it has been revised down a little to 2.1%, and it'll kind of lead into kind of what we're seeing in the economic data here in a minute looking forward. But as I say, Q2 still was a bit of a surprise on the upside, and those interest rate sensitive sectors that were really hit last year, the housing and the autos, have have steadied really over recent months because of the stabilisation in rates. We're not going up as quickly with our rate increases. So if we go to the next page, you may say to yourself, you know, we've had the most aggressive rate hiking cycle in decades. Well, we're not in recession yet. You know, what's going on here? And really comes down to two things. One is the consumer. In fact, with this revised GDP number that came in today, actually the consumer part of it actually went up, the consumption. So the consumer's still quite strong. And then secondly, it's just the tight labour market. Okay, it's one of the tightest labour markets we've had for years. If you look at the consumer, why are this rate increase cycle not hit the consumer as much, you know, you and I in the street? Well, if you look at that chart on the top, right there, actually when you look at consumer debt, most of it is mortgages. About 2/3 of it is your mortgage rate. And that is predominantly fixed. So the average debt cost to the US consumer is about 3.5%. Okay, much lower than where we are with rates right now. However, you know, as you start to look at companies, particularly ones that tend to need money, tend to need debt to expand and run their business, they're starting to be somewhat impacted by these rate increases. You know, when you're having to borrow money at 9-10%, you know, it's going to really impact the bottom line. And we do expect to see that trickle into the labour market and core the labour market. And as you know, these rate increases take, you know, 4 or 5 quarters or so just to work their way through to the system to become a drag on the economy. Well, the numbers we've seen this week are now starting to show that. The JOLTS report coming yesterday, job openings report, came in a lot softer. Lowest number in 2.5 years. We've got payroll coming up on Friday. We expect that to be somewhat softer now as well. The good news there is this may allow, if we are starting to see this slow down now, it may allow the Fed to stay away from making another rate increase. There's still talk that maybe in November we could potentially have an increase. A lot of it will come down to inflation data too. But what we're starting to see in the jobs numbers now, potentially here, you know, and I'll be somewhat surprised, but potentially here we may be able to get a soft landing out of this over the remainder of this year. If we fall in recession, maybe only a very mild recession. So that's good to see. Let's look at what it all meant for indices for you for the quarter. As you can see, you know, no surprise if we've had such a strong, you know, economy. US stocks, great returns again for the quarter, up over 8%. It was really driven, like the first quarter, by the Magnificent Seven that we talked about last time. And these companies that have some kind of association with AI, megatech type companies. You know, they're about nearly 30% of the S&P. So obviously it's made it very difficult for active managers over this time period because in theory you've got to have more than 30% of your portfolio in 7 names. And that's just not prudent for big institutional investors. You can see international stocks only up 3%, far more headwinds overseas, particularly in Europe. Germany is in a technical recession right now, and there's talk that the ECB will increase rates again in September here. And you know, they're in a far worse position in Europe than we're sitting here today in the US. And then the emerging markets, you can see they're barely positive. That's really driven by China. China's a third of that, and you may have seen, you know, some of the poor economic data coming out of China. Over 20% of their graduates are unemployed right now. I mean, it's a big, big problem that they have, and they've really struggled with coming out of this pandemic. You know, they closed down for much longer than everybody else, and they have far slower growth than is expected. And, you know, there's just weak overseas demand, really tepid domestic consumption, and huge problems in their real estate sector. A couple of years ago, remember, we were talking about Evergrande and you know, that company going bust. Well, in last couple of weeks, an even bigger company, Country Garden, there is defaulted on its bond payments. So China have got a lot of issues ahead for them. On the bond side, as you can see, yields did tick up slightly, so you did see bonds actually did retrench a little, down nearly 1% for the quarter. But your high yield and bank loans, no surprise, benefiting from the shorter duration and the floating rate characteristics of them, they did outperform and were positive. And as you'll see in your performance, was accretive again for your fund for the quarter. And then just to finish up at the bottom there on, and apologise for the formatting now, on the PowerPoint it doesn't exactly replicate. It looks better in your books than on the screen. But at the bottom there you can see the inflation-sensitive assets. With as kind of inflation starting to retrench a little now, we did see that therefore some of those returns came in below broad markets. So TIPS a little worse than obviously fixed income. And then commodities continue to sell off on a weaker energy, on the expectation of a slowdown as we go through the remainder of the year. So any questions on the economy? If not, we'll get into your fund.
I'm just curious, and you may not know this, but when we talk about the interest rates that the Fed has moved up here in our country, and it's, what, 7% now, I don't even know where it is now, and affecting mortgage rates and bank loans and stuff like that. When you say China's in worse condition than we are, where are their interest rates, like for
Coming
homeowners
down.
and stuff?
So they're coming down.
So they're coming down and ours are going
so
up?
they're trying to stimulate their economy at this point. They're about one of the only countries that are. Because they're so lagged behind the rest of the developed world, particularly the US. I mean, we started our stimulus day one, almost through COVID, opened up quicker, started our rate tightening a lot quicker. Europe followed two quarters after. So they're a little bit. But China, they're just starting stimulus now, so they're several years behind in that kind of coming out of COVID.
Okay.
Yeah. Okay, so what did it mean for your fund? Here we go. So we ended the quarter just over 515 million. You gained over $15.5 million for the quarter, and return just a little over 3% net of all your fees. Did lag your policy a bit, as you would expect in that risk on, Magnificent Seven tech kind of ran quarter. That's an annualized rate of, over 15% a year, so you kind of would expect that. You have seen that reverse now in August, where we've suddenly had the Magnificent Seven have given back a lot outside of NVIDIA since then. And actually, the more defensive posture and the higher quality portfolio like yours is well ahead now through August, as you would expect. So you've had a reversion back to what worked well last year is working better now, rather than the first half of the year. So we talk about how, what worked well was the Magnificent Seven, as we said, growth equities. Your defensive equity continues to do well with heightened volatility and risk in the market. You're getting a great return there. And then your infrastructure, private credit, you added those in over the past couple of years, being mindful if we're going to have an inflationary and rate increasing environment, and those are the funds that have done great for you through that type of environment, as you would expect. What didn't do as well was the value equities, really on the back of financials. As you see, we continue to see some stress in the smaller regional banks, particularly those that lend into the commercial real estate areas of the market. And emerging market, which we talked about with China. And then your timber farmland, the US timber and farms doing well, but South America continues to be a lag in this fund, particularly Brazilian timber and Chilean farmers, as you heard in the first quarter. And that's something that, although it's not daily liquid, that you can flip that quickly. But we are looking at some maybe just US-based only farm fund there as maybe an alternative for you to take out some of this currency kind of risk out of that too. Now, we've been asked by our clients a lot this quarter, it's been a crazy 3 years since COVID, and we've had a kind of mini cycle. So how have we done? We we had rates here, went to zero, and now they're back up here, and then we just had a very mini 3-year cycle. So we've looked here for you. You actually gained, and thank you for finding that yesterday, Greg. We had loss in the original one. You actually gained over 107 million over the past 3 years. Returning high 8s, net of fees, 9.1 gross, above your policy index and quite a bit above your benchmark. That's that benefit of all the diversification you've done there. And that's ranked you in the top 13% of all DB funds here in the US. So that was good to see, at least through that mini cycle, the work that you did to prepare yourself for that obviously paid well for you. Over the past 10 years as well, gained 278 million, returned above your assumed rate of return, 7.5 net, 7.9 gross. Again, about right on policy there, but quite a bit above bench. And again, top quartile. But more importantly for you guys now, having a mature fund with more money going out, you've done it with a lot less risk. You only have a beta of 0.95. And that becomes important for you and other county funds now as they're maturing, and then you're going into more money going out each year than coming into the fund. We did make a change in the quarter. We did make a replacement on the emerging markets side and lowered the allocation there, just on the issues I said going on with China. And you are continuing to get your real estate redemptions. You had about $1 million come in again from real estate during the quarter, which is good. So you've been ahead of the game there in getting redemptions in. Looking ahead, you did de-risk at the beginning of August. In fact, your timing could have been more perfect because lagging it that 1 month, July was actually up, and then July came and we've had a sell-off. So, you get lucky now and again on these things. I mean, but obviously you de-risk because you're looking forward over a certain amount of years, not timing it for the 1 month. And it just made sense because of the new rate environment for fixed income. In fact, when you look at your fixed income composite now, you're yielding 5.3%. Great yield out of bonds, which we've not seen in years. And then finally, because you de-risked, what we're doing is actually diversifying that fixed income. You do have an IMA that I know your solicitor's just given a final review on now. And again, you're doing a great job through diversifying through asset class, but then within the asset classes, it's good to diversify as well with your managers. And then the final one, because of all the changes you made over the last couple of years, your IPS became very thick with addendums that you guys were all signing. This change, this change, this change. So I thought, it's time. You kind of got it settled now, looking like a big institutional fund. Let's clean up the IPS. So we've updated the IPS with all clean new language in it. And then obviously now you don't have all these addendums there. The target allocation on the back is where you are right now. So you've got a much cleaner document if anyone requests your IPS or you need to look at it. Okay. We did the same for OPEB too.
Yeah, I'll get that to you guys for your signatures.
Yeah, you got plenty of time to review. As I say, the most important thing is the target allocation, which you're managing to already. This is more the language around guidance about how the money is invested, roles of the board, roles of people like myself, custodian, investment manager, things like that. It really dictates how the plan should be run, and it gives you the protections as a fiduciary of these are the things you can do, you can't do, etc. Let's go forward a couple of pages to 25 here. This is the performance. We did talk more about the long term. This is where you compare yourself to 1,500 other defined benefit plans all here in the US. And the good news here, as I said, from your performance, yourself's been very good, top quartile on that 3, 5, 7, 10 years. What has also been good is look at your rankings of the policy index. That's really the thought that you put in your asset allocation. Again, top quartile across the board. So that drives most of your expected return and risk. So you have a very good, I think, policy now, And you can see that's well above just trying to index it in a 65-35 type portfolio. And the good news, come back to that 3-year number, you can see you guys are right near the top there. there's funds that are sitting here today with 3 years that were negative. They did make a loss. And you can imagine they just froze, when COVID came along. So it's good to see you right at the top of that universe breakout there. And as I said, you've done it with lower risk. And the key there, as you see in that bottom right, that tells you the story every time, what to expect. Early part of 20, when you're at low quality rally, really strong returns, you like your policy, very similar to what you see in the first half of this year. But in normal markets, 21, in negative markets, 22, they're the times when you're going to be ahead. So that kind, you know what to expect now. I don't need to labour on them. These things tend to come in, pretty steady quarter on quarter. That's what I was talking about, that yield to maturity. Your duration, you are a little shorter, so you're not taking an interest rate bet. But look at the yield, you're getting a big bump in the yield of 50 basis points there, just from the mix of your strategies that you have in there. And I'll finish up just talking just a little bit about, we'll go through all the managers because you have so many now, but just from the strategies. And if you look at that US equity, the brown line, that really tells the story of how your fund is invested from an equity point of view. If you look at 3 years, you're ahead by about 70 bits for, that higher quality kind of positioning that's benefited, over that kind of cycle. But lagged obviously a little this year because you're going to be underweight those Magnificent Seven. We're not going to throw more than 30% in 7 names. It doesn't make any sense to have that amount of volatility in an unfunded pension fund. Similar story on the global side. There you got a mix of managers like Dodge & Cox done excellent versus its benchmark for you. So is MFS at the bottom there. Their bench is that minimum vol over the past year, more than double outperformed that. The Artisan, the growth one, has lagged, and that's just because they are quite a bit underweight those mega cap tech. They're more mid cap tech, but that's about 400 ahead so far this quarter because of its allocations to more of the mid-cap growth and the healthcare sector, which is the leading sector now as markets are stressed in August. On the international side, you lean more to value, and value's underperformed growth for the past year. That's why you see you have lagged there. But you are getting a good dividend there. You're getting nearly 4% out of your international portfolio. You have had some growth exposure, as you can see. Harding Loevner and that fund has done much better over the year. Obviously, with growth outperforming there. That was up 14 compared to 10. Defensive equity, because, say, that's 75% cash just sitting there. Yet over the past year, you've returned nearly 14% because of the premiums that they're paying for the options, for the insurance, for the volatility. As we talked about last year, we expected this year might be a good environment for this. And that's kind of panned out. That's what we've seen there. Just because you're getting such a higher rate of return just on the cash that's sitting there. There's the collateral. Real estate, really tale of two different strategies here. Clarion has been extremely aggressive in its write-downs. They have been selling offices in this market to pay redemptions, and you guys have been benefiting from that, getting the redemptions. So they've been somewhat ahead of many of the other Odyssey managers. So we do expect that theirs will kind of slow down and be starting to outperform in the next couple of quarters as some of these other managers catch up with writing down the normal kind of levels. TA, as you know, we added them just over 2 years ago. The reason we added them, they had one office, that was it. And we thought, well, they haven't got the headwinds holding them back, and you kind of see that in their performance, 450 ahead over the last year. So between the two, working well for you. And then the areas that done well here, infra, I think every quarter I come in and say, yeah, about another 2.5%. Just great income in this higher interest rate environment, and these being predominantly kind of income-driven time return. You can see you're averaging close to that 10% a year out of that strategy. So doing well. Timber, as I said, you only have 3% there, but it's really the overseas part there that has struggled. And what to say, we are looking into maybe a US only there for you, at least. Maybe not for all the assets, but maybe to diversify some of that asset out. Like you have in all your other asset classes, you have a number of different strategies. It's such a small universe, that timber farmland. You know, it's not like go and buy an S&P 500 manager. But we're going to do some due diligence over the remainder of this year and look see if we can split that. Private equity partners continues to do well. 1 year 13.9 relative to the 10.3. Obviously lagged last quarter because it's more of a kind of a private structure, and that benchmark is more of a traditional bench. But you look at over that long term. But if you look on the right, 11.8 relative to 2.6. So been a great investment for you. As below has been private credit. I mean, who would have thought over 10%, 13.5% you got out of loans over the past year? I mean, that's pretty amazing return. So again, it's been a good diversifier, and within it, you know, these strategies have returned well for you. And then to finish up on fixed income there, you can see, you know, we're never too far away from the bench on fixed income. Very important when you only had 19% allocated to it. You need to keep it pretty safe. But you can see around the edges there, you have been somewhat accretive, 50 basis points ahead for the year. And that's really been driven by some of the shorter duration, high yield type investment that you have in there. You only have a small amount at this point. We're down to 1%. And that's by choice, because we do expect if we are going to get some stress in the market, spreads will blow out. We'll look to add to it at that point. So when they come back in, you'll get some good return at that point. So still don't see Greg, but I'll try to talk a little slower.
I was looking to see if I got it.
Any
We can
questions?
pick him up another time, so.
Okay. Well, that's all I had on the pension fund. I can be
Okay.
quicker on the other two. Any questions on the pension?
What was the highest number we ever had in our pension fund? About 520 million?
Yeah,
541?
about 540. Yeah, I think we
Okay,
talked that
I just
about
wondered,
last
yeah.
time, didn't you? You can actually. This is quick to go back because this is the shorter version. 424, 550. So at the end of any quarter, well, looked about 515. Well, that's kind of where we are now. But no, we were intra-quarter, I think you got about 540.
Okay.
Yeah. But remember, you're taking more money out as well than's going in.
Exactly.
So it doesn't mean that you're 25 million
Right.
less from a loss point of view, because money's, you know,
Right,
you
going
take
out.
out quite a
Right.
lot a year. 1 year, 15 million withdrew last year. So that's a big nut of that 25, actually.
It's kind of hard for us to get used to that concept.
It is. Actually, that's a good. Yeah, even I didn't realise how much that's increased. That's quite considerable at this point, 15 million going out. Just on the OPEB, and, you know, this somewhat rhymes what the pension does, so we can just work off the observation page here. You know, it is smaller, so you do have more index in there, obviously, to keep your costs down. So you're not going to be as far off indices, etc. So in fact, pretty much right on policy for the quarter there, as you see. Gross you would be. Similar kind of things worked for you. You obviously don't have the privates in this, and, you know, it's a $36 million fund. You're not going to have that. You don't have the infra in it, but you can see, you know, at least you do have some diversification and defensive equity, real estate and core plus fixed income. What that is fixed income that can actually invest some in sub-investment grade too. That was all accretive for you. And then similarly, what was a headwind for the fund for the quarter, as you can see, was exactly the same as the pension fund. Again here, if you look over that 3-year period, you've gained nearly 7 million, returned 7.2 net, 7.6 gross, pretty much, again, right on your policy index. And that's at the 32nd percentile. So not as good from a ranking point of view as the pension fund, because you don't have them extra diversification. But at least with some of the diversification you have been able to do here, away from stocks and bonds, did at least leave you, quite a bit above the median over that period. Similar changes were made here because you have just a mutual fund on the high yield. We actually terminate it in a quarter. On the pension fund, you have a CIT, so we left it in place to add to it. But here we thought, because we can easily get in and out of funds daily, we said at this point, then let's just take the high yield out, and we'll get back into that when spreads blow out at some point. You're getting your real estate redemptions here as well, and again, obviously, very mindful of fees. You're about 18 bips below the national average for pension funds here from an investment fee point of view. Now,
But when you look at the management fees for the big fund at point
yeah.
0.45, and this is 0.36, I mean, is that normal?
Yeah, it's because you've got more alternatives. So
Okay.
the alternatives cost more. So on the pension fund side, your traditional parts are cheaper because they're larger allocations. But you have some allocations to infrastructure, real estate, private equity, private credit. They're going to be more expensive than investing in the stock market. Okay. Whereas on the OPEB plan, your individual costs might be a little higher, those that are not in mutual funds. The mutual fund prices are the same.
It just looks funny because
costs are lower because you don't have those alternatives in there that cost more.
Okay.
But good question. We didn't de-risk this one. Remember the last quarter, this is more of a kind of a long-term kind of pool that's just left to grow. You're taking care of your kind of annual needs from the general fund. A couple of years ago, though, you did put money in and then kind of withdrew it as the year went by. If you were planning on doing that, what I would recommend is maybe then keep those assets that you need for that year in kind of a 1-year fixed income, because then you'll get that kind of 5% what you're getting right now, but you're not going to get any of the issues that you're seeing at some of the banks where you've got to sell out of it, and now you've got to sell out of it at a discount because rates are ticked up again, something like that. So I would kind of de-risk if you're looking to put some assets in, but if you're not, I think you're fine just to continue to leave this to grow as it has been.
So you're recommending to put,
Oh, no, I know in the past there's been some, sometimes you put money in and then you took money out, monthly to pay benefits. Other times you've just left it alone and then you paid your benefits just out of your general fund, I guess. So I was going to say, if you reverted back to what you used to do and put money in again, then I would be mindful of, maybe de-risk that part and keep it in that short fixed income, that money you need for that year, so it can just, accrue that yield that you're getting on the 1 year. But then you're not going to get hit like if rates go up again and the price comes down and you're selling at a discount.
okay.
Any questions on the OPEB? In fact, there you can see there where in 2018 you kept putting money in, and I think in end of 20 you might have put money in. But then you've been flat ever since, so you've not had any cash flow. Okay, last one for me is deferred comp. And most folks are invested in the progressive glide paths, and just the wrong tab. As you can see, actually 68%, so just a little over 2/3 of employees here are invested in your target date funds at very low cost, as you know, and that is, probably the right fit for most folks to do that, because they will progressively de-risk over time as they approach retirement. Of your funds, 6 of the 11 funds outperformed for the quarter, and one thing we are being asked by some clients right now, the early part of the year was very narrow. As I said, it's 7 names that ran. The market's becoming a bit more broader now, and it's becoming a little bit more volatile. And so they've asked for us to maybe add another active option in the large cap space. And we do have a really good kind of stock picking option. So that's something I think we should consider. We can send you the information on the fund. I know you have another advisor as well, Holly, maybe to look at that. But that might be something that you may get some request from employees, and maybe another kind of more of an active option to help navigate maybe some choppy markets there as the year.
We've also got the Roth request, so we're going to be adding that on the first of the year.
Yeah, that's really good as well. Not many counties have that
No.
set up right now, so you'd be one of the first to do that. It makes a lot of sense. And then just the good news, we do see the asset allocation on the right here. If you ignore the top line, that's the target date funds, as I said. If you look at the bond and fixed, the fixed is that stable value fund. And then compare that to the other ones there, your equities. If you look at that mix, it's about a 70-30 mix. So it's not too dissimilar to the pension fund. So, that market split seemed to be good. And when I look at large to mid to small, even that market cap split looks fairly close to the market. So it seems to me that those that are making their own selections have been mindful about, maybe the education they've received and that they seem to be investing it prudently for what I see as the average age of the people in this plan. And then a couple of other trends that we're seeing here. Participation rate continues to just slowly tick up, as you can see, year by year. It's gone up another 2% over the past year to 20% now. Contribution rate is staying somewhat steady there, as you can see, just a little over 7%. But what is interesting, those that contribute over 10%, and this would tend to be those that are probably later in the careers, that's gone up considerably over the past few years, over 13.7% now. So really, really healthy number there. And the other thing just to be mindful of, Empower do have this, what they call My Total in Retirement, where they will kind of sit and be an advisor for the plan. And there's actually 209 participants doing that right now out of all your participants. So you have a lot of participants that are quite active, in what they're doing here on the 401k and engaged with your record keeper. And that's jumped up about 100 since last year. And that's probably because of where the markets went last year. You normally see when the markets go down, people will want to be more engaged. Hey, help me out here. It's actually funny, if you look at the year prior to that, it actually went down because the markets were doing well. Everyone thinks, oh, well, doing well, don't need the advice. But it's interesting, you tend to see those trends. But more important to me, I just wanted to let you guys know, there's quite a big number there that are actually engaged in the management of the fund here, which is good. And as I say, that's really all I have. Just the final one here. I'd like to show is just on your target dates. As you can see, well up towards, between top and second quartile on the returns with your Vanguard funds, even though you have lower equities, and expense ratio, lowest out there. That's why they're number one. So I think you've got a good 457 401A plan there for members. And it's interesting now, I don't know, it's because we just followed, CCAP commissioners and treasurers conferences, but quite a few controllers are calling us now and saying, hey, can you help us on our 457, because they're still nationwide and they're still paying, through the roof. And I'm like, well, you guys have been doing this now for 6 years, so quite a bit ahead of them. So that's all I have.
Okay. Any
Thank you.
final questions for Lee? All right. Thank you, Lee.
Thank you.
There were no executive sessions since our last meeting. I will open it up for any public comment. Hearing none, if I could have a motion to adjourn?
I'll make a motion to adjourn the meeting.
Second?
I have a motion and a second. Any discussion? Hearing none, all those in favor of adjourning signify by saying aye.
Aye.
Opposed, we are adjourned. Have a great day, everyone.
Did that guy ever call?
I don't know, I would call.